Snipers, I am here with Joshua Earp, and we are going to discuss this major resistance level at 24,300 that Josh took a short position in. And we'll talk about exactly why Josh took a short position here. But this is a major resistance for Bitcoin. If we can break above 24,300, then there is a potential chance we could reclaim this $30,000 range. And I know that might sound crazy to some people, but check this out. If we look at this June 12th candle for Bitcoin and we pull up the NASDAQ and we look at where the NASDAQ was on June 12th, what you'll notice here is that we have reclaimed the consolidation above the June 12th candle. And so the NASDAQ has already done this. If Bitcoin were to just do what the NASDAQ has already done, it would get above this June 12th candle into this consolidation zone once again. But we would have to break above 23,300 for that to happen. And what I find very interesting, and I'm going to let Josh share his thoughts, is if we pull up the Bollinger Bands, what you'll notice is right around 22,000 US dollars was the resistance of this Bollinger Band. And so we've invalidated this fractal where the Bollinger Band acts as a resistance and we see Bitcoin dump. And we have broken out of this extremely important resistance, which is now our most important support level at 22,000 US dollars. If we break below 22,000 US dollars, the door is open for 20,000 US dollars to come and get retested. And we can talk about potential higher low forming here. But what's also very interesting, in my opinion, is not only are we breaking the Bollinger Band resistance, but if we pull up the channel resistance for Bitcoin, the downtrend channel resistance level, we're also breaking above this major resistance here. So there's two major resistance levels that Bitcoin is currently breaking, and that is what's extremely important about what's happening to the current price action. I'll also mention this. When we start to look at the bearish scenario, the first thing I want to mention is Bitcoin is losing steam. The last two daily candles were red, while the S&P 500 had two green bullish daily candles. And so now we could certainly say that Bitcoin is losing momentum here at this major resistance. This was a sniper's resistance for over 12 months. We had 24,295 mapped out. And when we broke it as a major support, this is the first time that we're testing as resistance. So what we're seeing right now isn't new to anybody that was tuned into our channel. We discussed this when Bitcoin formed this second higher low at 18,600, that our next target was 24,300. And so it's not a surprise that we're seeing the first retest get rejected. That's just what happens at a very important resistance. And this resistance level was created when Bitcoin initially broke into price discovery. This was the first place that we took a pit stop. And then once we broke this resistance, we went all the way up to 35,000 US dollars. And so that's why it wouldn't be a surprise for Bitcoin if it were to break above this $24,300 level to at least come to the midpoint of this range. It wouldn't even have to get to 35,000. All we're saying right now is we get to the midpoint of this range, which if we were to just pull up the 3 daily moving averages, shows confluence with the 100-day moving average being tested. So for a beginner trader, they're looking at this breakout of the 50-day moving average, Bitcoin holding the 50 and potentially coming to the next destination, which would be the 100 period moving average in the immediate short term. So that's what I'm looking at. But if we were to continue to talk about a bearish case, there's also narratives that get attached to price action. And so one of the narratives that could get attached to this price action is ever since Elon Musk announced that Tesla sold 75% of their Bitcoin position, we've only seen Bitcoin show an abnormal performance against the S&P 500 to the downside. And we've only seen red candles since that narrative. So for the narratives and the fundamentals, that's what I would put on the table. But once again, the charts are black and white, so that's what we monitor here more than anything. And I'll also mention this, if we look at Bitcoin against the S&P 500, we're also rejecting the 50-day moving average so far. We're below it. So this is clearly showing why Bitcoin is losing momentum against the equity markets. And so here's what I'll say. And I'll let Josh get into some of his thoughts, but 22,000 is the most important support level in the immediate short term because that's the Bollinger Band resistance, and it opens up the door for that channel resistance to get tested again. And so 22,000 is extremely important. And in the immediate short term, I would say 23,500 is also important because that's when Bitcoin started to lose momentum against the S&P 500. And so in order for us to see Bitcoin reclaim that momentum, that means we wouldn't come down to 22,000. We would break back above 23,500. And now we put further upside targets on the table. Potentially a higher high could form here into 25,000. But for the bearish side, I would say maybe we'd see a test of the weekly open around 21,000 before we see any sort of volume come in. So if we look at the daily, weekly, monthly open, you can see a test of the weekly open here could very well be on the table just below 21,000 US dollars. So I'd love to hear your thoughts, Josh, on what's going on, because the Ethereum to Bitcoin chart also approaching a market structural resistance level. Ethereum to US dollar pairing, you can see here, broke through its 2018 previous all-time high. We could potentially come test that back down here. So do you want to share your screen, Josh, and talk about your short position that you took? Because I'm sure some would love to hear about that for this midnight update. Smash the like button for the YouTube algorithm snipers and subscribe to Josh's channel if you haven't already. The link is down below. We did a live stream today, so that's on his channel right now. But Josh, I'll switch to your screen right now and you can talk about what you've got going on.
For sure. Thank you. I appreciate it. So, by the way, guys, we figured out what the problem was. Apparently, Zoom, messes with the microphones, even if you have a high quality microphone. But, for the time being, the whole thing is with Bitcoin, yeah, I'm in a short right now. You don't want to put in a long at the top of the resistance. I know it, like, even in a bull market. I just want to say that again right now, because there's some other, people that think that's okay to do, which, by the way, hey, look, do whatever you want to do. But what I'm saying is, even in a bull market, you don't want to be putting in a long during resistance. You just don't. You want to put in a long at support, and you want to short at resistance, or just, if you're not market neutral like me, even though I'm a macro bull, I hold a lot of Bitcoin spot position, right? But I trade, long and short on, just kind of in my other account. You have to keep them separated. So the interesting thing is, let me just make sure I got the chat pulled up too. I want to make sure that that we can keep an eye on that too. So the whole thing is, guys, let's go ahead and turn off these moving averages, which, by the way, I think not only the lines, because I saw some discrepancies against the Coinbase chart versus the Bitstamp chart, which the Bitstamp chart has the most history, I believe, right? Or is it Poloniex? I think Poloniex for Ethereum, right?
Yeah, Poloniex for Ethereum.
So the whole thing is, because like it's showing a breakout on the Bitstamp chart of the channel, right? This channel that we have going on here at the bottom, but on the Coinbase chart, it doesn't show a breakout. So my first advice today for everyone listening is you want to be checking multiple charts, You don't want to just rely on one chart. Because like I said, I can even show you as well. But let's just go over the analysis. So we're in this channel, and this is the weekly. One hell of a spam wick for the weekly, all the way up to this spider line right here. But let's just go examine a little further in the daily. So Bitcoin right now is at an inflection point. And, I've kind of mapped out here, the ladder going up and the ladder going down. Some people call these wedges, rising wedges, falling wedges. There's so many names, right? I call them trend lines, and I call it predictive analysis. And look, here's the thing. I'm bullish long term. You'd have to be silly to not be bullish long term if you look logarithmically, right, over time, if you zoom out. So I'm super bullish. I just think that it's going to have some room in the downside, right, in the immediate short term. And I think we're going to bottom out, really, to be honest with you, probably at the bottom of the channel. That's just the way. The trend is your friend until the end. And I have to tell you guys right now, it's not the end of the trend. That's why that's why they say bots are better trader than humans, because the bots don't have any emotions. The humans, however, it's a different story, which, emotions is energy in motion. And right now, Bitcoin's in a little bit of motion. What do you think, Naeem?
Yeah, I mean, I love how you have that channel drawn out because it's like you said, you don't want to be entering into long positions at a channel resistance. That's where you'd want to entertain a short position in a bear market. And if you come down to the support of a channel, that's where you want to start taking those long positions. So I think I'm certainly looking for a long position down there around that $20,000 level because Bitcoin has at least proved itself that it's not ready to, just see further downside, that there is a potential that we could be breaking out towards that $30,000 level in the near future. So I definitely think that shorting the resistance is never a bad idea. You don't want to be shorting the bottom, right? So at least be able to short the top of a consolidation, because that's where you can set a tight stop loss right above the resistance, because if it invalidates that market structure, then, above 24,000, I think you'll start breaking out.
Yeah, I think so too. Now, look, here's the reality, guys. I am in a short position, and I have been in a short position since about 24,000. I made some profit, and we got the bounce where I figured we were going to get the bounce, which is really right here. You can see it in the daily candle, and I waited for the pump, and I just saw further downside, so I entered another short again. But that's just, and the way that I'm trading it right now is, look, once we come down to the spider line, I'm going to sell 25%. So let me just draw this out. So, here's my original entry. I wrote this down all the way to here. I don't even know if you can see that. Sorry, I'm on a laptop, so it might be a little harder to draw than if I had a mouse. But anyway, so that was this move. Waited for it to come back up here. Took a short. And then now, where am I going to sell? Well, I'm going to be selling 25% of my account about this level at this spider line, okay? Because these spider lines have confluence of major support and resistance all the way back from the very beginning of 2018, okay? So that's the first reason why. Then I'm going to, the middle of this channel has served as some good support. I mean, look at this, 1, 2, 3, and Naeem, by the way, is the one that pointed this out. But look at this body candle of the body, top of it. Arguably there's some good confluence with this middle of the channel, but it's so close to it just depends on how it goes. It's so close to the spider line, I almost don't want to take profit there. I would rather wait till, the weekly open right here. But yeah, so I would take 25% there. If I felt, sketchy about it, and I didn't see further downside, I would take 25% there. I'm going to take 25% of my trade here, okay? And then I'm going to leave the rest in the account. Once again, I'm going to leave the rest in the trade, because we could, I might sell a little bit here as well, right? These are my take profit zones, just so you guys know. So I showed you my entries, now I'm showing you my take profits. And it may not get all the way down here. It may come down only to the weekly open and it bounce. It may come down to the middle of this parallel channel and it may bounce, right? I don't know. But what I do know is we're extremely overbought. We're at the top of the resistance. And what I do know is that I'm sure as hell, even though I own a lot of Bitcoin, I've been holding Bitcoin since 2015 is when I first got into it. I wasn't like a trader or anything back then. I was just, buying it and holding it. I didn't really even know technical analysis back then, really. But the whole thing is, I'm going to take advantage of some short-term volatility to the upside and the downside. And the cool thing is even though we're Bitcoin bulls, you can do this on derivative accounts, like Bybit, etc. And you don't have to really affect the price of Bitcoin because we all love Bitcoin. We want to see it succeed. We don't want to see, the DXY. But what I'm saying, succeed. But we're going to talk about that next. Last thing I wanted to say real quick, then I'm going to give the floor back over to my brother Naeem, is this right here. Last thing I wanted to say before I go over to the DXY real quick, and then I'll give it back to Naeem, is the reason why I'm leaving, a decent percent in my account is because we may potentially, and I hate to say this because this is bad for my actual spot position, but we may potentially have a breakdown, and our target would be right here at this line. I mean, we could still hit this yellow line, which would put us at around, hypothetically, this would put us at around 17.8. So we could still hit this level and be considered bullish. That's the thing people don't understand. Sure, we would have, like we're making lower highs here, and sure, this would be a lower low, but I'm just telling you in the grand scheme of things, like it could still potentially be bullish. Even if it makes a lower low from, say, this low. The reason why is because, it's slightly above this one, but even if it did, come down, I mean, it's very common to see those patterns where it's like, it fakes you out to the downside, right? So all I'm saying is in case there's a major breakdown right here, I'm going to take advantage of that. And then if not, then and also I want to mention too, I'm going to take my stop loss. I'm going to move it to break even, and then, basically slowly in profit. I call it a manual trailing stop loss. But honestly, I don't think this breakdown is going to happen. I don't think it's going to get that bad. Personally, this is just what I personally think. I don't think it's going to get that bad. Sorry, I got the wrong tool going on here. But I think we're going to get for sure a bounce around here. And then if not, this would be a good place to start dollar cost averaging to this yellow line, this kind of like this area right here, between here and the yellow line. Because really, honestly, and once again, if we zoom out, we could come down and hit this yellow line. I mean, this is a bullish yellow line. I know things are very bad right now, and I know we all think the sky's falling, but like this yellow line has always held us up ever since 2020, or not even 2020, I meant 2017, right? Beginning of 2018, right there. So keep that in mind, Now, let's go check out the DXY. So here's some GAN technical analysis on the DXY. And on the daily, we're looking at the daily chart. And I got to tell you right now, pretty crazy stuff. I mean, we could potentially come up and hit the weekly open right here, at around this level right here. I mean, it's very possible to come up and hit that level. Not only that, but at the same time, if we zoom out on the monthly, which is where it really gets scary, we're in price discovery right now with the DXY. And the next target would be right here, where I already had the circle drawn at 123. And then beyond that, oh my God, Bitcoin, if the DXY gets up to 166,530, that could put Bitcoin at potentially around, I hate to say it, man, but $3,000 to $5,000 a Bitcoin. And you know what? If Bitcoin becomes, let's just say even $5,000, it could possibly kill Ethereum, and it could possibly kill other altcoins because the price would become so low that someone could come in and just buy it all up and manipulate it and control it. And there's a lot of things that can happen, especially like the lower your market cap, the more you become susceptible to 51% attacks and things of that nature, right? Which we can go into. But I'm gonna keep it super simple, short tonight. And that's all I wanted to talk about Bitcoin and the good old DXY. So, and then maybe we'll handle some questions at the end. But I'm gonna turn it back over to you, man.
Wow, Josh, I think that was a phenomenal analysis. I really appreciate you being on the channel. Josh's channel link is down in the description below. And we thank you all, snipers, for tuning into the channel today. This is another midnight update to talk about Bitcoin. 22,000 US dollars is that big support level. And then we've got 23,500 as our immediate short-term resistance level. That could potentially put us back over 24,300. And then from there, we're going to have to determine the situation based on volume and how price action reacts to that level. So thank you all for tuning in today. Smash the like button for the YouTube algorithm. And Josh and I will see you guys next time.
Thank you.
Snipers out.